Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1715th edition of Short-Term Trading Live with Oscar. Good evening, traders. This 1715th video is coming at you on a Tuesday night. That would be for trading Wednesday, January 10th, 2018. As you know, futures trading is extremely risky. If you didn't know that, you certainly should. Always trade with stops. Always put your stops in first. Please know the risks behind this game. All right, traders, so what's in store for us on Wednesday, Jan 10th? Well, let me say this. NASDAQ is still bullish. So we've got a green, and of course it comes out red, but we've got a green OMNI for trading in the indices. Let's do that again in caps. We've got a green OMNI for trading U.S. indices. That would be S&P and NASDAQ. Green OMNI for trading on Wednesday, Jan 10th, 2018. However, let me just state this, and you cats know me, I've been doing this a long time. The easy money on the upside right now at this juncture in the market has been made. The easy money has been made. It gets a little more difficult now that we're up here. The simplest reason, it appears that when we do get towards the top of this channel, you get a little bit tired. Top of the channel, a little bit tired. Just about top of the channel, a little bit tired. Top of the channel, but this time it looks like it's penetrating and getting above that channel. So I've got a question mark there. The easy money, however, has been made. The easy money was when it hits the top, you can expect a downside. And then when it hits the downside, you can expect a rally. Now here, going through the top, though it's no longer easy. One of the simplest reasons why I say the easy money has been made, I've been analyzing for 35 years since I started doing this. I've got many, many other indicators, indication bases, you name it, signals that I put together. But the simplest way I can show that to you is right here. Easy money's been made, although we are buyers, and the OMNI is green for emini, S&P, and NASDAQ. So that's what I think for trading on Wednesday in the NASDAQ, S&P. There are some interesting markets, however. You know me, I'm always digging. Take a look at these bad boys right here. Look at the 30-year bonds. Let me tell you right now, kids, lock in those adjustable mortgages while you still can. Why? This is a weekly chart of the 30-year T-bonds, okay? This was a channel that the T-bonds were stuck in for a long time. These are weekly bars. Each one of these green bars represents an entire week's worth of trading. With that in mind, look at how you stayed in this channel for a long, long time. Week after week after week. 2014, this is right here. We are now at 2018. And you broke the channel, right? Never used to break. It would hit it and rally and near it and rally and not even near it practically and rally and hit it and rally, and we broke it in the form of a bear flag. Interesting, right? Let's add to it the 200 bar moving average now. Look at this bad boy. You follow the 200 bar moving average. You haven't broken it since, let's see, what kind of a date can I give you here? Since 2014, you have not gotten lower than the 200 bar moving average. Here we are, boom, you got below it. The beginning of 2017, very briefly, March 2017. So March 2017, we dipped below the 200 bar moving average briefly and spent the whole rest of the year above it. But look now, that's the most bars you've seen below the 200 in a while. That is not looking as good as it used to. There's a big bear flag with a big projection to the downside, and now confirmation below the 200 bar moving average. Lock in those adjustables while you can, kids on your 30-year mortgages, but we're not done just yet. Watch this. Look at the 10-year notes. Look at how interesting this one gets. In fact, let's move this over just a little so you can see everything on this chart. 10-year notes, which moves, you know, I'd have to say in advance of the 30-year bonds in many cases, has dropped out of this channel. Nice, long, weekly channel now. We drop through that channel. Last time we got under the channel, very brief. Right back in it, right? Stayed in it, brief dip, rally. But this time, that was no brief dip. And what else happened? You got below the 200 ball moving average at the same time. Right here. You got below the channel, 200 ball moving average. Then the market proceeded to do something interesting. It went down, went up and tried to get above the average, dropped, tried to get above it again, failed miserably, and is tanking, if you ask me. That's your 10-year notes. So basically what I'm seeing in these 10-year notes is that we've got some sort of an omni projection without a time on it, but it shouldn't take too long. But you've got a 11815 projection. Let's do it like a bond. 118 carat 15 projection. Let's get rid of those caps. 11815 projection in 10-year notes. How about that, huh? And then we could take this a little lower. But let's talk about the 11815 first. Maybe at some point in time this year, we get down there, if not lower. First projection to come from Omni, and it's about 10-year notes. Back to bonds. Your projection in bonds, interesting, and it's not a long-term projection, nor is it a bottom. It's just a projection that we should get to, and that is 142.15. How about that? That should be red, not green, right? 142.15 is a projection in the bonds from Omni. So, not that that's a huge drop, but this is a weekly chart. On a daily, it would be humongous from here to here. So here's our first Omni target for the year. One of them in bonds, the other in 10-year notes. 142.15 in bonds, and just to be fair, we'll put it back in front of your eyes. 118.15 in notes. So that's what we have so far. There is no time on these targets. It's just an expectation that we should get there. 30-year bonds, 142.15. Notes, 118.15. I hope this helps you traders. Lock in your adjustable mortgages while you can. Bear flag below the 200 bar. That's in your 30-year bonds. You saw the 10-year notes. And one more very interesting chart I would like to show you. Look at this one. Traders, I gave you ETH a few days ago. Said Omni came up with a buy signal right around 1040. And it exploded since that moment. What is this about? It exploded since that moment and has gone all the way up here. And I think right now it's sitting at about 1337. It's been higher than that. Omni buy signal was just a couple of days ago here at 1040. And here's the thing. I thought, let's just give this some breathing room. It whips around a lot, so let's put buy orders in at 950. And it didn't get quite to 950. It got somewhere in the 970s. No fill. It's trading now at 1333. It's going to cost a couple of dollars extra for me to get in this silly ETH trade. I had Ethereum correct. The call was right. The orders were in the right area. Missed it by just a tad. And now it's going to cost like, I don't know, $300 more to get it. In any event, no big deal. We're still going to get in. We still like the ETH, the Ethereum. We expect to move much higher. Traders, come on down to livewithoscar.com. Hang out with me in my free live trading room. Remember, keep your emotions out of trading. By the way, if you bought the Ethereum, great trade, kids. Remember to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, rock and roll. I will see you all at livewithoscar.com.